So Nvidia just reported and they beat on both revenue and earnings per share, reporting $1.05 per share in revenue and earnings per share and 46.7 billion in revenue versus 46.1 billion, and the stock is lower. At one point it was down over 3%, now it's down about 2%. But this is kind of interesting because if I told you ahead of time that Nvidia would have beat on both top and bottom, we would have all thought the stock would go up. Why is it down? I'm sure there's numbers attached to it, and they're gonna have an earnings call where they'll explain some more things, and if it's positive, the stock will probably rebound. If it's negative, it'll go further down. This is the fickleness of the market. It's not rational when everybody's euphoric. Even we've seen companies that miss on both and the stock skyrockets. It's just all random. This is exactly why we don't worry about short-term results. We don't care about earnings. We look at it to sit there and understand what are they seeing about the future, but we never make decisions on one quarter's response. We're looking at long-term in the company. We let the market be crazy. We let the market decide what they think the company is worth, and then we sit there and teach a process of understanding the intrinsic value of the business that also then allows you to be a buyer or seller of the stock at the market price. Do not let the market prices dictate whether you're right or wrong in the short run. We have no idea whether Nvidia is reasonable based on one quarter's response. That's a very, very short-term way of looking at things. Amazing growth in this business. A mere 2 years ago, maybe 3, the company was doing $14 billion a quarter in data center revenue. They recently just did $41.9 billion in this most recent quarter. Triple the revenue. It's absolutely incredible business. But again, as we teach in our principle-driven investing, just because there's a great story doesn't mean that the stock is a great price. This is an incredible business, great balance sheet, great growth, great cash flow. Everything from a financial perspective looks awesome. The question is it a reasonable price? That's what we're here to ask. And here is my fundamental analysis of Nvidia. So Nvidia, guys, this is the biggest company of all time right now, and it's something crazy. Like the company's up like 35,000 or 300 some thousand% in how, I mean, it's an absolutely insane business. I want to remember, it's a great business. Look at some of these fundamentals here. Guys, you have 70% gross margin. It's been growing like crazy. You've got an enterprise value of $4.5 trillion versus a market cap of 4.47. That difference there is debt. It's 30 billion in debt, and they generated 72 billion last year in free cash flow. If that sounds like a lot of numbers, when you can pay off your debt in its entirety in less than 6 months, you got a sustainable business for a while. The question is, are these guys going to dominate forever? Who knows? No company dominates forever, but they have done a great job of becoming the prime leader in AI chips. And until people catch up to that, it's going to be Nvidia's to run with. Now the question becomes, as our fifth principle of our fifth tenet of our principle-driven investing, a great story can become a bad investment if you pay the wrong price. And this is something I like to talk about all the time. The price of the company is $4.5 trillion. Now, guys, this is $4.5 trillion. This is how much the company is. Would you pay 4.5 quadrillion? Of course not. Why? That's the difference in investing versus speculation. Would you pay 4.5 billion for a company that had all these numbers? Of course you would. You'd make your money back in weeks. That is the point of investing, and that's all I talk about. I can sit there and love a company and say it's a great company, but if the valuation doesn't make sense, there will be a few that grow right into it and are fine. But if you have this thought process in every single company that has major hype, you're probably going to lose a lot of money in the long run. Every great story, airlines, cars, those two industries changed the world. And from 1900 until now, thousands and thousands of car companies and airlines have gone bankrupt. In fact, more money has been invested in airlines that's even been made. So the world in general, as a whole, is a money loser on airlines. Doesn't mean you can't make some money here or there. But if I told you 120 years ago what the future of airlines and cars would be, the same stories would apply. This is changing the world, and it did change the world. And guess what? Still, people lost money. That's what I'm trying to focus on here. So, in our community, we have an average rating of a hold. Okay, we've got several strong buys and buys. We've got that in there, but our community members are a little bit more conservative. But let's go look at our analyst estimates here. $3 this year in earnings per share growing to $7.46. That's some good growth. Not as much as a lot of people hype it up about. And revenue growth, 54%, 25%, 13%. I mean, going from 50% down, I mean, this is insane growth. The company is absolutely flossing. But remember, look what happened with Tesla. Tesla couldn't miss in the late teens of this decade, of this century. They couldn't miss. Look what happened. Then Elon becomes unpopular. He starts talking about politics, buys Twitter. All of a sudden, people hate him. Sales are declining. The two biggest Tesla bulls in the world, meet Kevin and Kathy Wood, were saying in 2025 and 26, Tesla would be selling 10 million vehicles. Guys, they're nowhere close to that. In fact, they're not even going to break 2 million vehicles this year, probably even next year. So you sit there and say, just remember, you've got a good investor, somebody who's going to temper their expectations. Now, with that said, you've got to be able to merge the numbers and the story together. And that's what we do here for our stock analyzer tool. It's putting these things together. So let's see what I did the last time I did Nvidia. Now, guys, I was probably very, very conservative on my revenue numbers. I put 5, 10, and 15. Let's go 10, 15, and 20. 15% revenue growth, not as much as the analysts are predicting, but I still want to be somewhat conservative here. Profit margin. Guys, I got to go, I went a little bit lower because remember, they're first to market. This new profit margin, but I'll go a little bit higher just to be a little bit more. Let's go 35, 42, and 49%. Let's go a little bit higher here. Now, PE. The world's largest company is currently selling for 60 times PE and 62 times free cash flow. Okay. The question isn't what it's right now. What's it going to be in 10 years when all the hype has died down, when the business is more established? Well, the market average is 15 or 16. I'm going to give this company 20, 24, and 28. I'm going to give them that premium. And then I'm going to do my 9% desired return. This is what I think the company is worth to match the market, 9 or 10%. It is not, it's without any margin of safety. And remember, you need margin of safety because the future is unknown and we're humans and we make mistakes. You got to have a margin of safety. I hit the analyze button. The stock's currently at 182. This is where I have a problem with Nvidia. But guess what? This is still way higher. I mean, this company has absolutely killed it. Absolutely killed it. But I still tell you, like, if you're making it on rosy assumptions, it doesn't leave much room for error. And a good, astute investor will leave room for error. Now, the hard part is, in order for this company to become a great buy, all green here, the story's got to shift on them from a public perception standpoint. And remember, they announced earnings quarterly. I don't care about quarterly earnings. I never do. What I care about is, what's the future of the company look like? Because when you buy it today, you're buying it for its future. You got to look at the past to see what they're capable of and how they handle things. And they've handled things very, very well. But what does the future hold for Nvidia? It is a phenomenal company, probably will be. Guys, it's been a phenomenal company since the late 90s. When I was a little computer nerd building computers in the late 90s, we always used Nvidia graphics cards. Early 2000s, we always used Nvidia graphics cards. They were the best. This company cares about quality. They care about everything that matters. So for those of you out there who sit there and just say like, oh, Paul, I do not hate the company. I love the company. I hate the valuation. And if you're not doing that, if your view of the stock is driven by the stock price and not by the metrics, the fundamentals, then you're a speculator. You're not an investor. And I want people watching this channel who are investors. Now, you might look at the stock price and say, wait a second, maybe that it isn't what I should look at. You have hope. There's potential for you.